All right. Good morning, everybody. Second day of Powell. This will be a little more impactful than the first one. Big news out of Japan. They are more than hinting that they are going to begin raising rates after years and years of not raising rates. And as a good exercise for you, if you want to know how Japan raising rates is going to affect the US, use AI and ask it that question, and you'll get a pretty good idea of how it's going to affect the US. It's a good exercise to kind of get more familiar with how you can use AI to better understand the different economic environment that we find ourselves in constantly. This is kind of unprecedented territory if BOJ does begin to raise rates. So unless you've got some kind of degree in finance, you're going to be left wondering, well, what's that mean for me? Use AI and you don't need a degree. It'll talk to you in your own language. It'll put it to you in words that you can understand, because you can even tell it, hey, spoon feed this thing to me like I'm, a teenager or whatever you want. So it'll speak to you on your level. The end result, by the way, just to give you a little spoiler alert, is it'll knock US dollar Japan to the downside. Projections into, say, the 138, 135 area. And if we use US dollar Japan as a proxy for the Dixie, the DXY, and the 10-year, then we would expect the dollar and the 10-year to fall. Say the 10-year to get around the 3.4, 3.3, something like that. And for the dollar, I don't know, back into definitely below 100. And of course, we would expect equities and the indexes to rise on those lower levels. Something to consider. It would be a short-term thing though, right? So green on the screen, Hong Kong down the most, 1.25%. They still have so many issues over there that all the stimulus that they're trying to do, other than just straight up dumping money on stuff, and it's still not working. So we look at what's going on. Everybody's kind of on hold. We're waiting for data out of Europe. They're going to have a rate decision this morning. If that doesn't make sense to you, just think of it this way. Today's their FOMC day. Christine Lagarde would be their version of Powell. She's going to come out chipping her teeth, and they're going to make a rate decision. Now, they do a much better job of telegraphing than our Fed does. The expectation is they're going to hold and they're not going to cut, they're not going to raise. But just like with our own FOMC, it's not the announcement that we're necessarily looking at, because we already kind of got an idea with our own FOMC that they're not going to raise and they're not going to cut, they're just going to hold. But it's after that statement, what next? What is the projections or the hints on when there will be a cut? And that's going to be something coming out this morning. And then back to back with that, we'll get Powell. The entire morning is likely to just be shot, and it'll be the afternoon where we get any good, true trading. Just yesterday, there was some serious divergence that's worth noting. And while we had the candle patterns set up really nice, we had some good price action. The divergence between the price action and the cumulative delta, which is what we see on the bottom side of this chart here, just really took a lot of that joy out of the trade, or certainly a lot of the trust out of the trade. So here's like the line in the sand where everything really started to diverge. You can see the cumulative delta falling here while price continued to rise here. So, everything was saying that we should be looking to sell this, and price just kept right on going. Now, in the options world, the calls stayed heavy to the upside all day. in the S&P. I went looking at the NASDAQ yesterday, and at 3:30 yesterday, we did start to see call selling that was noticeable enough to recognize a change in the optionality. And we had some reasonably significant put trading, put buying at that same time. Nice spike up. So very, very late in the day, there was a little bit of optionality that actually pointed to the downside, but otherwise the CD, the cumulative delta, kept pointing to this downward move. And through a lot of the morning, we didn't get it. If this chart isn't showing the open, but here's the ES open from yesterday. I know it says 8:30, but it has my local time on it. So there was just a lot of divergence yesterday, which took a lot of that that trust in the setup, took it away. So we're going to wait on Powell. We're looking for a after he gets done with any prepared remarks, and if they give him any latitude to just speak freely. He does pretty good when he sticks to the script. He stays on point with what is prepared for him to read. He sounds hawkish and he can get the message across. But once he puts the paper away and just starts answering off the cuff, he turns into a little dove. And so I think he's going to, if given the latitude, he's going to give this market the same mixed signal that he always does. Hawkish at first, kind of pushing the market a little bit to the downside. Then he gets done and starts chipping teeth, turns into a little dove and pops us back up again. We'll see if they give him that latitude to talk or not. NASDAQ is up the most this morning at 0.5%. Right now, anytime you see the NASDAQ moving up or down, you immediately got to consider what's going on in Bitcoin and semiconductors. And semiconductors are tied directly to Bitcoin as well. So really, it's just Bitcoin. We're going to get a little bit of jobs data today. We're getting some Fed speakers outside of Powell, or alongside Powell, I guess we could say it that way. And as you can see, the biggest thing on the agenda this morning is what's coming out of Europe first. We got to get that out of the way. Then the job numbers. Then the ECB is going to have a press conference. Then we got Powell. Got some auctions today as well. And then we're going to get data out of Japan. It's kind of a big deal. Now we're on finance juice. I continue to bring this up as an example of a tool that you really want to have as a day trader. It doesn't cost you anything to get an account here, but I recommend that you get one, even the free one, just so that you can use this gear icon right here and you can change where it gets news from. It's a news aggregate service. It's just gathering it up from different sources. Well, some sources are better than others, right? Not to disparage the trash out there, but I don't really care to hear anything from CNN and MSNBC and Fox News. That's a waste of my time. I don't want to waste the screen space. So I use the gear icon and I eliminate those from the news sources. And what's left is, maybe a little bit better, worth reading. This thing will adjust to whatever's going on through the day. So if something is happening, it'll show up here. They do a really good job of it. If you get the pro report or the pro version of this, it comes with audio. You'll hear a good 30 minutes, or not 30 minutes, 30 seconds to a minute before they post things. So you kind of get a little bit of a heads up. And they also speak things that never get posted at all or get posted later in the day. So that squawk is kind of nice. But even without the squawk, just using the free version, Finance Juice does a good job of pointing out the speakers for the day that don't always land on the different sites. And when those speakers are speaking, if they say something that Finance Juice believes may be impactful to the market, they highlight it in red, make it easy to see, and put it in here so you can keep track of what's going on through the morning. This is a go-to site for me through the day. I don't get anything for bringing them up, right? It's not like I'm some affiliate of theirs. I'm not. Just one of the goals in the morning briefing is to help you prepare for the day and point you towards tools that I know can help you that isn't going to cost you anything. I mean, if we want to talk about cost, we can go look at some really expensive services, but you know, if you're not profitable trading, kind of hard to justify going to get a $200 a month news service. Fangs are up a little bit this morning. All right, so this here in the bottom is cumulative volume index. Now I have this one set to the NASDAQ composite. That's not like the Qs, that's the NASDAQ 100. This is the composite, so it's the bigger one. It's got, you know, a bigger basket. On Thinkorswim, you can set it to the NASDAQ, the NYSE, and MX. If you're using it on TradingView, you can set it to all three or just all US markets, which is way better, right? Why pick one of these US markets when you can look at all of the US markets combined? Cumulative volume index, kind of like what it sounds. Now you can Google it. It's not a complex indicator, but we have a nice push. We're headed back towards that Bollinger Band, and that's positive buying, right? It's net buying. Look at it that way. If it was headed to the downside, it would be net selling. So, you know, when this is pointed up, net buying. So we've got a little bit of a discrepancy here. Price, we've got this red candle. This is a weekly chart. That candle's not done, but we are lower than where we closed last week. So the candle is red, and yet cumulative volume is breaking out of this pivot and trying to push to the upside. So a little bit of divergence, kind of a bullish divergence, really, if you think about it. If you are going to use TradingView, there's a way to kind of set your chart where you're looking at that cumulative volume index and say the NASDAQ composite. So not a bad way to go. On TradingView, the NASDAQ composite symbol is IXIC. So if you want to set your chart up that way. On the left side, I've got it on an hourly, kind of an inside day. And on the right side over here, I have it on a daily. So you can see, you know, a little bit of a divergence there. Price fell much more than the indicator did. The indicator is still holding at these highs like it really wants to continue to the upside. We expect price to follow, right? That's kind of the idea with this. So just pointing out a little bit of bullish divergence there, and how the NASDAQ, even though I mentioned there was a little bit of put selling yesterday on spot gamma, you could see it at around 330. It doesn't come close to the share volume or the index volume. Let's say it that way. The flows here. The call wall is still at 52.11. The put wall is at 50.46. Seems like those numbers aren't right. Hold on a second. Yeah, those aren't right. I didn't get the, I'm like logged in on the wrong account. I updated the other one. Hold on. Yeah, there we go. Call wall is still 52.11. Put wall is back down at 48.11. They rolled that down, and that's a bullish bias. It's a bullish behavior, bullish action. So when we see that, it doesn't necessarily mean, you want to run out and buy a bunch of calls or something, but it is a bullish sentiment to see that put wall get rolled down like that. On the other hand, however, they didn't roll up the call wall. And so that takes away or negates any bullishness that we would look at that from the put wall. So I'd say it scratches us and puts us back to zero in a neutral position on a hurry up and wait scenario that we've been in anyways, because that's what this whole week is. Hurry up and wait on data. The volumes aren't light. I was a little surprised this morning to see the volumes around our normal range. They're not concerned about what's coming out of Europe today. Interesting though, but I guess it points to their ability to telegraph in much better way than our Fed does. Messaging is always a big deal coming out of the Fed, right? They are so bad at it. But if you've ever heard any interviews from Christine Lagarde, she doesn't suffer fools. She doesn't like foolish questions out of reporters either. And she's kind of grouchy and snappish. Not Powell, who sounds like a confused idiot half the time. So hurry up and wait mode. We're sitting nicely inside of yesterday's range. That sets us up for some really good trades. All we got to do is break out of the top side, and we've got expansion with measured moves. We already broke out of the downside, but was able to bring it back in again off the ADR half. Now, remember, when we hit the ADR half early enough, we can go to the other side. And that kind of continues this drive to the upside and takes us up to 51.38. We would already be looking that way because we're closer to that side, but we can add to the bias and look at that as our target because we've already hit the lower end. We're back above the 10-day, which is nice to see because we did get down below that last night. We're back above the 3-week, which is a kind of a big deal. And we're back above the daily pivot point and the weekly pivot point. That's a lot of levels that we got through this morning already. And they haven't even got any decisions that, that are headline moving yet. Now we got the previous week's close right on top of our ADR half line at 51.38. That's kind of going to be a hard thing to get through. And if we do get through it, 51.50 psychological level, round number level, and last week's high, and we failed to get through that the last time we hit it. That's why it's last week's high, right? You kind of get the idea there. We tried this last week and we failed to get through 51.50. A lot of liquidity there. And remember, liquidity resides on the other side of the pivot. We put more liquidity there when we failed to get through it last week. So even just getting to 51.50 is going to be a big deal. If we dip up into it, we're going to run into all of that liquidity. So at least a first touch play will be a short off of that level. A couple points maybe, right? First touch rejection plays. Get that at least. And then we'll see if we can continue to drive through it. If we can, then we've got the full ADR up there. But this purple line, it's kind of a, I don't know, a lighter purple. That's a voodoo line. It's not one of the minor ones, but it's not one of the strongest lines either. It's certainly just one to recognize. We do have a voodoo line up there that we have to deal with, 51.43. 32 is a cog line or 31 is a cog line. Either way, 32, 31, doesn't really matter. So we're set up nice for an inside day breakout. We can just measure and plot market moves. And for the downside, we broke out of the RTH low last night, but we didn't break out of yesterday's low last night, right? If we were to look, yesterday's low was closer to this zigzag line way down here at 50.48. So we had a RTH breakout and we were able to recover. It's not exactly the same thing. So if we do head to the downside, that's our first goal, is to break through the ADR half and then test yesterday's low, get through that, the 0 gamma level, the white line, which is a voodoo level that they call snow, real imaginative there. Get through that, and we'll focus on the full ADR at 50.65. There's a lot of levels underneath us: the weekly pivot point, the daily pivot point, 3-week moving average, volatility trigger, 10-day moving average, our own Globex low, the ADR half, and then 0 gamma levels. It would have to be really, really bad news to get us through all of that. So it's possible, it's doable. I never want to say the market can't do something, but base case argument, we're not going to cut through all that. We are getting a little extended from VWAP. So at the very least, we're going to expect a little bit of consolidation or a pause to let VWAP get caught up. One good pullback, see, even remotely close to coming into VWAP space, will be enough to give us a reset, right? And we're very likely going to get that pullback with the ECB decision. I say that, but I shouldn't say that, right? It could just spike up without pulling back at all. All right, we've been talking about losing this lower volume all week. We're finally there. As each new candle prints, we're taking off this volume down here, and you can see how little there really was down here. It's so minor you almost can't see it. So we're printing new candles. We're going to lose these candles here, and by the end of the day, our new range will be 50.70 to 51.60. That's a really tight range for a 10-day market. Now, if things get nasty today, we can test this low, that 50.63, and begin expanding with measured move to the downside. Otherwise, we're going to hold the line and or test these highs and look for the breakout and expansion to the upside. Yeah, that I should have said it. This is a classic P, just barely, but as we lose this data down here this morning, you're going to end up with more of a like a lowercase b. This little bit kind of throws that off, right? So if we do come up a little bit higher and start building out that zone, you'll end up with a classic B shape, capital B. Yep, that's a good point. So here's one for the books that is worth kind of considering. And I'm not trying to give you an answer to this question, just pointing out that at some point you need to have an answer for this question. Should we do a VPOC on this? Now, obviously now it got hit, so we wouldn't do it if we got up this morning and we were looking. But what about last night? If you were a last night trader and you came in and you wanted to mark the VPOC, we opened right there. And we had two candles that printed right at the POC. Do you count it as being hit or not? Now, this isn't a trick question, and I'm not trying to confuse you. You need an answer to this, because at some point, if you're going to have your own style, your own approach, you're going to have this situation happen to you. And then you got to try to figure out, what am I going to do here? Does it still count as a VPOC or not? Whatever decision you make, stick to it. Don't change your mind later on. Now you can stay in, experiment phase, and you can market and examine the outcome and see if you like the results, or you can just fall back to a default that says, whenever I'm not sure, I'm just going to put the line on. Those are more than acceptable, but sometimes our tools are not just so cut and dried, easy and simple. Sometimes they present us with a little bit of a trick question that needs to be answered. Now we've run up and hit it at this point. So as far as I'm concerned, I don't need to mark it. We've cut through that zone. But what if we hadn't run back up earlier this morning? Would you consider it a VPOC to carry forward? My answer to that is yes, I would. If we hadn't run back up and hit it, I would have considered it, but we've already hit it. It's not a VPOC, so I don't need to carry it forward. $51.40, however, is a VPOC overhead that we have to think about. So when we bring it back over to this one, 50.43, well, that's where the purple line is anyways. So it's like I've said before, your levels and lines and analysis should coordinate with other levels and lines and analysis. That's what brings the confirmation that you're doing it right, and two, that the level has merit or value to you. We just got the same answer from two different sources on two different time frames, that 51.43 is a level to pay attention to. Gotta love it, right? All right, so we're back inside the box. I mentioned on Wednesday, I mentioned that on Tuesday I had taken a long, but notice there's a difference between selling some puts on the expectation that price isn't going to go down farther and is likely to rise a little higher than where you sold the puts. There's a difference between that and buying calls. In a scenario like this, buying calls would say, I think we're going to go to the other side, that we're actually going to get some movement here that makes it worth the risk of buying the calls. Selling some puts, on the other hand, just says, I bet you get back above that red line and that you stay above it for the end of the week so that we can monetize those puts. It's less of an ask out of the market. I don't need the market to run. I don't need the market to really go anywhere. Just stay above that line. So with the strategy where we take the other side, if we break out to the downside, we go long. If we break out to the upside, we go short. Think about the answer to that question. What's your goal? You really think you're going to go to the entire other side? I did. That's why I grabbed some calls. But maybe the better choice would have just been, on this scenario this week, to have just sold some puts. That probably, in hindsight, it's pretty easy to look back now and say, yeah, the puts would have been a better choice. We're waiting on Powell. The last hurry up and wait week that we had, we ground to the downside through most of that week, and then we popped towards the end of it. I kind of assumed we were going to do the opposite this time, and we were going to grind back up while waiting on Powell, and we didn't. The call isn't lost. It just isn't very profitable. Not this time. It's okay. You can't win them all. So this morning we got semiconductors, the FANGs, gold miners, tech, and metals and mining. So not only do we have precious metals, but metals and mining. All of that is up this morning. And of course, China's down. Bitcoin is down a little, but it's not down enough for our qualifications, right? It needs to be down a 0.5% for me. And it's not even down, well, it's barely down 0.25%. So not enough. Right now we've got the S&P 500 index. We don't want to see 500 names, right? We want to see 100 names, but they don't offer the S&P 100. One thing that you can do is use the market cap and just slide it until you get to 100. Now, You can struggle with this and try to get 100 perfectly. I don't struggle with it. I just get close enough. I got 97 out of 100. Yeah, it's good enough. At a glance, we've got a pretty good idea of what's going on out there this morning with these heat maps. When I first started and I seen this heat map, I thought, what a waste of time and space. This is stupid. Who would ever look at this? Why would I ever want this? But that was my ignorance of being a new trader. I just didn't know any better. These charts can save you all kinds of time, effort, and energy. And depending on where your source is, you can do these for volume, options levels. You can do them for all sorts of things and for different time frames. This is pre-market, but we could do day, week, month, quarter, year. It's all kinds of ways to see information, and that's really what we're trying to do as traders, is get information and then make an informed decision out of it. So I used to really talk poo on these heat maps, but I've changed my tune. If you're not using them, it's something to consider. Thinkorswim has them, TradingView, I mean, they're all over the place. It's not like you got to go get one somewhere. The size of the boxes on this particular heat map is a representation of the market cap. So the fangs stick out really easy. They're the biggest boxes. Apple, Nvidia, Amazon, Tesla, Microsoft, Google, Meta, right? Some of the smaller ones, the fangs have the like AVGO, and they stand out. So we can see Tesla's getting whacked pretty hard, down 2%. Apple's trying to get a little bit of a rebound after falling so far, up closer to 0.5%. Nvidia up closer to 2%. So not too bad. Some of these you can break them down into, you can group them by sector, by industry. I've got them, in their group by sector, but a lot of different ways to set this up. So retail's looking reasonably decent this morning between Amazon and Costco. The banks, they kind of got hit a little bit yesterday. Might see some little relief bounce perhaps on that side. So with KWeb down, it makes sense that FXI is down, China is down, but cloud computing is down. Now this probably ties in with Google, those moves that we were seeing in Google. And you have to be careful with this particular ETF because sometimes it won't get any flows in the morning and it'll still be giving you the after hours of last night. But seeing that it was 1.25%, I was pretty sure we weren't seeing after hours from last night. The print is actually way down here at 21.25. So it's a significant drop, but we're not getting flows with it. It's just an algo print. Yeah, there's very likely the reason right there. Google's getting a little volatile this morning. It's like my Epic pen quit working there for a minute. The quitter. So we mentioned Google the other day, how it was kind of at a critical level and it needed to hold or it was going to perform like an apple and really start to fall. So we could be maybe witnessing a little bit of that this morning. And Bitcoin shaking a little bit loose. with things getting whippy real quick, I thought there might have been some news, but not what I'm looking for yet anyways. So gold miners, uranium, semiconductors, pot stocks, technology, and that's what we have for the upside. That's all we need for one of those rip your face off rally days, by the way, right? If you have tech and finance combined, both of those two, you're good. If you've got tech and consumer discretionary, you're really good. And if you got all three, you're amazing. I don't think it's going to be a day for the alpha protocols, not this late. So, that's not really on the table. If we can get it, great, but I just don't see it, right? We're talking about 98 or 99 names out of 100 all going to the upside, and I just don't see it at this point. So I don't think it's going to get that good, but you're going to want to see a continuation in the FANG names, whether through the MAG 7 or maybe the NY FANG index, and then some assistance out of the semiconductors. I was kind of expecting a little more out of bonds, but not yet. All right, so things with pot stocks aren't looking too good. Maybe they're getting tired of the pushback on legislation. It's hard to say with that group. And uranium is still digesting this top. As long as we keep the 50%, we keep the half back, then I think everything's gonna be all right. But that's still the line in the sand, right? That 25.5. And if you want a little tighter, then yeah, we'll leave it there. Never mind. We got a little scoop pattern, and it's really tiny. It's not a big scoop pattern at all, but SMH coming back up to retest that 230 level. Now on the weekly, I mean, it's just a big old expansion, right? But it did come down and close the gap on the breakout, and we're just continuing to the upside. I know how overextended that looks, and there's probably somebody itching to short this already, but I would advise you not to, right? You don't short something so strong like this. Wait. Now, Tasty trades with Tom Sosnoff. They do have a short, the aggressive contrarian trade strategy, if you want to Google it. And basically, they look at how far we've gone over, I can't remember all the stats, but I think it's 7 days or 10 days. And if we've moved to the upside X amount of percent in those 7 or 10 days, then they take it short. They take it the other direction aggressively. For the most part, it works out. I seen him try that on Apple and Tesla before they did a stock split a few years ago, and he got ran over hard. But I mean, nobody wins all the time. So, strategies just get you pointed in the right direction. So if we have semiconductors up like that, the only conflict at this point would be gold being up. If that's a tell for pushback against the NASDAQ, and yet semis are up and tech is up and gold is up, then somebody's off there. Somebody's wrong. And we would expect one of those two groups, either the NASDAQ group or gold, to go back down again. But look, there was divergences yesterday and it held, right? So they can all be up together. There's nothing says that it has to turn around, but it's not doing what it's supposed to do. So we'll see. We'll see which one blinks first, right? So not a bad group to work with this morning. And you might get a little something out of finance. You know, we got that big outside bar. So that makes it a little challenging because we got to see price get outside of that range. But look at it from the weekly point of view, and we made it back to an inside day breakout. So while on the daily, you know, it looks a little rough from the idea that, yeah, we still got to run up and break out of yesterday's range. But from the weekly point of view, we're up on that breakout already. All right, everybody, watch the clock, be careful, and I will see you all tomorrow.